Hello guys, fairbinaryoptions.com here. It is Sunday the 16th of March. We are preparing for the next week's trading and looking with interest at this US dollar Swiss franc, the 4-hour chart. And as you can see, or as you very well know, the Swiss franc is a safe haven currency, meaning in tense periods, in let's say particular aggressive situations on the markets, traders have the tendency to buy safe assets, and the Swiss franc is perceived to be a safe asset. Now, I don't know if that is going to be the case on next week. But what I would really like to do here on the US dollar Swiss franc is actually to buy call options, not put options. That means a bit of a risk on move for the US dollar Swiss franc, or let's say a risk off move for the general market. So I would say we are hedging a bit against of the classical risk assets. Now, what you're seeing here on the market, if you take a look at this structure here, you must be aware of this contracting triangle. From here to go like this, A, B, C, D, E. Like any contracting triangle, it should travel between the B and D and A and C trend line. So A, B, C like this, D, E. And this means that the wave or the previous wave to the upside actually ended right here at the high. So the count to the downside should start from this moment on, not from here, not from here, not from here, not from here, but from this moment on. And let's try to mark this moment here with a vertical line. Now, the move to the downside, as you can see, it is clearly no impulsive move. Well, if it is no impulsive move, we want to see what it is. Is it either a terminal impulsive move or a classical correction? But it makes a new low. If it makes a new low here, when compared with this one, then, so when compared with this low here, price actually is making a new low here, and therefore we have the prerogatives of a terminal impulsive move or a falling wedge. How does a falling wedge looks like? Well, a falling wedge, first of all, let's try to make the shape. A falling wedge looks like this. Let me clone this one. So from here to here, so this to be the 1, 2, 3 trend line, and this one to be the 2 to 4 trend line, like this. And therefore, this would be our falling wedge. What does it mean? It means that price from here makes the following structure. A, B, C, the first wave. The second wave in the form of a zigzag, as you can see, it is channeling to L. Then the third wave, A, B, C. The fourth wave and the fifth wave here, piercing the whole structure. Then what to do next, or what to look for next? What I would like to do for next week is to go and buy call options every time price is breaking this trend line here, 87.59. It is not that far now. Price is 87.21. So every time price is, or when price goes and breaks this trend line, 87.59, I would like to go and buy, like I mentioned a bit earlier, call options. What does it mean? It means that the 5-way structure we had there, here, the 5-way structure, the terminal impulsive move is actually completed, and now we should rebound at least 50% of the whole move should come. That means around this area, 89. Now, this would mean bearish euro US dollar, and of course the risk on assets. So make sure you are looking at this 87.59, as this is quite important for the period to come. Let's write it here on the screen. That we are looking to buy call options on a break above 87.59. As this would be the most logical thing that price will do next week. Remember, FOMC next week, so eyes on the US dollar. Bye bye.